Good morning. This is Arlan Suderman, Chief Commodities Economist at StoneX, coming to you from the trading floor in Kansas City. It's a little after 9 a.m. on March the 12th as we assess another day of headlines impacting the markets. We did get the Consumer Price Index data this morning, and it overall came in less than expected, a little hotter than expected. We're still quite a ways away from that 2% mandate level, but moving in the right direction this time around. Ironically, it was kind of an average of a lot of solid inflationary items as well as some that were deflationary in nature. But the bottom line is that we're moving in the right direction, and we'll see how this carries. And overall, I think there is a sense that we're going to be in the near term be pulling lower. The market took some courage from it this morning. We did see treasury yields initially drop and then bounce back right where they were kind of before the data came out. Overall, tariffs continued to be the news this morning. The steel and aluminum tariffs of 25% went into play today. Canada is our number one supplier of steel and aluminum, shall I say. And so it impacts them more than other countries, but we immediately did see some reaction from Canada, Europe, continue to get reactions from China as well. And so this is something we continue to watch. Grain and oilseed markets taking a hit overnight, and that carried on into early trade this morning as well, with the markets worrying about how all of this may hurt the domestic as well as the global economy, reducing demand for our commodities. We did see a bounce back in the dollar after the recent free fall that it's been in, providing some modest headwinds. But I think most of it's all about retaliation and what might happen. Really, as you look at Canada, that's the main focal point. They're still trying to develop a functioning government right now. Don't think of their government as what we have in the United States, where we elect everybody to run things every 2 years with the presidential election, then every 4 years. In this case, we had a dismissal of the government that was running things because of a no confidence vote. And in fact, even Justin Trudeau has now been replaced by former central banker Mark Carney, who will now be the new prime minister coming up and head the Liberal Party. The Liberal Party had really been losing ground in popularity in Canada until President Trump started his campaign on making Canada the 51st state, and that's kind of rejuvenated a round of nationalism in Canada, and that has benefited the Liberal Party. So Carney will try to pull together a coalition government, but it's believed that over the next several weeks he will call for new elections to take advantage of that momentum when the Liberal Party might be able to get a better grip on power and form a better government from his standpoint. So really kind of lacking a functioning government to respond to these tariffs right now. Ontario tried to take it into their own hands and retaliate yesterday with a 25% tax on electricity that they sell to the United States, particularly some of the bordering states to Ontario. And President Trump reacted right away and said, okay, we're going to increase the tariffs on steel and aluminum to 50%. And then Ontario backed down. He also demanded within that same True Social post or social media post, reiterated that he's demanding that Canada back off on the 250 to 390% tariffs on U.S. dairy products, and reiterated how much money we spend defending Canada every year. So it looks like the tensions with Canada are increasing. President Sheinbaum of Mexico really seems to be working with President Trump. I remain cautiously optimistic that things with Mexico can be settled by April 2nd. I think the White House wants to settle things with Canada and Mexico by April 2nd when they focus on the reciprocal tariffs. But things aren't going very well with Canada right now, and they're not with China, but it's Mexico that we really need to retain. Now, with Canada, They're talking about limiting the amount of crude oil that they'll sell the United States, as well as the amount of ethanol that they'll buy for the United States. Obviously, that would hurt Midwesterners, but it would hurt Canada as well. So they haven't made a final determination on that. That's certainly something that we're going to have to be watching going forward. But right now, as we're at midweek, we're seeing that general weakness in the commodities, and it looks like it's generally going to be a down day due to this tariff fear that we have, although the bottom seems to be supported by end users right now coming in and finding some good opportunities to buy at these levels that keep us competitive in price. It doesn't mean that we can't go lower, certainly. The algos could certainly take us that way. But we've already come down a long ways, and so that has reduced the amount of fund buying that we're seeing at this point. Till then, look forward to updating you again, hopefully tomorrow.